Hello everyone, Happy New Year and welcome to episode 58 of JustDario Cigar Time. This is an episode I was really looking forward to recording because a bit of time has passed since the last one and a lot has happened in the past 2 weeks. I'm not talking about the stock market, crypto, or the general market environment. I'm talking about silver. Today is going to be a deep dive into everything that's happening. I will do my best to help you gather all the information to be prepared for what is going to happen in the near term and the medium term. Before we begin, don't forget to like the video, subscribe to my channel, and hit the notification button if you don't want to miss any of my future updates. All right, let's dive in. First, it is important to address the wider and wider disconnect between the price of physical silver and the price of so-called paper silver, the kind negotiated on regulated spot and futures exchanges like the COMEX, the LBMA, the Shanghai Gold Exchange, or the Shanghai Futures Exchange. Over the past week, reports of a significant shortage of physical silver have been piling up from not just Asia or Australia, but all around the globe. Dealers, even the largest ones, are offering the liter inventory they have left at an incredible premiums, on average 8 to 10%, but even greater in some locations like the UAE or South Korea. Many people on social media have dismissed this as just another retail mania, saying they are going to become bag holders and silver price is going to crash. For all of you who have been following me for a while, you know that is not the case at all. The reason, as I keep repeating like a broken record, and fortunately I'm now in good company with other intelligent people who understand the situation, is that demand for physical silver is being stressed to its current level by two important factors. The first factor is the extremely low level of available inventories around the globe. The second is the significant increase in industrial demand for silver. Unless you haven't noticed, more and more goods and products around us are becoming electronic. Everything that is electric, smaller in size, and more efficient requires silver, as it is the best conductor of electricity. Think electric vehicles, solar panels, semiconductor producers, data center, high-performance electricity cables, and so on. Plus, you have a limited number of investors who have always been relentlessly staking physical silver for a while. Put all this together, along with an annual supply deficit that has been running for the past 5 years of around 200 to 300 million of ounces of silver per year, and you can see why it didn't take long for physical silver to become unavailable. We have been warning about this for weeks. I wasn't surprised at all when even CNBC recently reported that companies, especially from China and India, have been trying to reach out directly to silver miners to secure supplies, offering up to $10 over the spot price. And as I flagged on X, this offer is for raw material. It doesn't consider costs like transportation, refining, commercialization, or production. So the ultimate price is absolutely much higher. Now, if we are in this situation of physical silver extreme scarcity, how is it possible that on December 31st, silver crashed 10% in a day, after surging 10% the day before, and on Monday the 29th, it surged all the way up to $84 before crashing down to $70? What the hell is happening? What's happening is that paper silver exchanges, the COMEX and the Shanghai Futures Exchange, have been increasing margins on futures contracts, with commentators arguing they are doing so to curb speculation. Sure, fair point. Prices are going up a lot. Speculation is a claim that has been made in the past. However, the truth is that this time, it's not speculative demand driving the silver price at all. It's not a crowd of retailers or hedge funds trying to squeeze the bullion banks, who are notoriously and chronically short on silver contracts. As a matter of fact, COMEX and bullion banks tried to attempt these sort of things a while ago. The playbook has always been the same and successful for those who want to crush the price down. That very same behavior created such a disconnect between silver and industrial demand and the economy that it brought the gold and silver ratio to absolutely stupid levels. These two precious metals should be trading at a closer price. The disconnect has now come to a point where it cannot be handled anymore. So now it's very clear why there is a disconnect between paper future prices and physical prices. Let's go to the next step. Let's talk about what happens in this kind of situation. That cannot last very long at all. So, what can happen in the very next days and weeks? First, every price disconnect creates a significant arbitrage opportunity in the market. Needless to say, however, for the arbitrage to close, you need to trade exactly the same asset. In the case of silver, the situation is a little bit different. Why? Because paper silver and physical silver are not exactly the same. One is a promise to buy or sell silver. The other is an agreement today to buy silver that the seller already owns or can guarantee soon, committing to deliver the physical metal by a certain date. So now you have this disconnect. And on top of this, you are in a situation where there are many more forced buyers out there, the companies. Let me remind you again, because it's important. If a company needs silver for its production and doesn't secure enough supply, the consequence is they will have to stop production. If they stop production, they cannot sell those goods. If they cannot sell, they make no revenue. That's a disaster. Furthermore, people saying, oh, if the silver price goes up too much, these companies will make a loss and it will be an economic disaster. So they will stop buying. I mean, hello? Where have you been living for the past 5 years? We are in a very high monetary inflation environment where central banks keep printing money. All over the globe, this has given companies an incredible ability to keep increasing prices because central banks keep printing money out of thin air. This money is used to create debt, especially consumer debt, so people continue to be able to afford higher and higher prices. Hence, all these companies facing increasing silver prices will surely not have much problem increasing their ultimate product prices. Additionally, a lot of people don't understand that there isn't much silver in a single product component. For example, in an Apple phone, you have roughly 7 milligrams of silver. In a Tesla car, you have about 3 ounces, and so on. So, the per unit cost is not that much, but they have to produce hundreds of thousands of solar panels, EVs, billions of phones, and hundreds of thousands of semiconductors. If they don't have that small silver component inside, with the current design and performance requirement for electrical conductivity, they simply cannot operate. So you have many companies out there like Tesla, Samsung, BYD, and so on, with very deep pockets, and they need silver. We already saw very recently what happens when companies with deep pockets need to secure the supply of a specific item very quickly because it's critical for operation. I'm talking about memory chips, DRAM, where prices increased 3 times in the span of a few months. Somehow, we didn't see many people out there shocked about that. Back to silver. This is exactly the situation we are in. There is almost no silver left out there. Whoever you ask around who deals with physical stuff will tell you that, at best, they can secure some supply in a month, but large deliveries cannot be committed at the moment in any way. People will say, oh, they're going to melt down their silverware and sell it. Yeah, sure, maybe. But then you have all the process of collecting the scrap, recycling it, refining it, and distributing it. That takes months. This situation is not very different from where we were in 2020 with COVID, where all of a sudden production and mining had to be forced to a stop. We had limited inventory and people didn't know when life would return to normal. So people started buying all the toilet paper, long-lasting goods, and food they could find. Companies started scrambling to order 1.5 to 2 to 3 times their expected production, just to try to secure anything that could be manufactured at that time, because ultimately prices were increasing. But the companies had already sold those products to distributors, so they weren't getting the profits. If they couldn't restock their shelves fast enough, they couldn't make revenue. This is the exact situation with silver right now. There is such an extreme scarcity that it will take many months for this to ease up a little bit. Because let's not forget, we are still in an extreme deficit situation, and you have companies that cannot afford to stop production. This is a very important point to understand. So, as not to be shocked to see silver prices skyrocketing way more than what happened already in 2025. I'm talking about skyrocketing very soon. This is not speculation, not fear of missing out. This is a matter of business survival for many companies out there. There is one way, and one way alone, these companies can get their hands on physical silver very quickly without stopping or significantly reducing their operation for several months, if not entire quarters in 2026. If the price goes high enough for all those investors who secured large quantities of physical silver for themselves over the years at some point, the price will be good enough for them to let go some of their inventory. The question no one can answer at the moment is, what is this price? I tell you, currently this price is for sure not below $100. I've been talking a lot to people who have very large quantities of physical silver, always as part of their business. The only answer they have is, come back when you can discuss prices seriously. Because this is the problem right now. The disconnect of the paper market from what you see on screen is so extreme that people have simply stopped using that price. But if people stop using that price, it becomes a critical matter for all the industries that rely on those numbers in the course of their businesses and operational management. Here is the third topic I'd like to address today. Currently, the CME has been increasing margins very frequently. They did it on December 12th, again on the 26th, effective on the 29th, and again on the 30th of December, effective on the 31st. Sure, no problem. They can increase margins more and more. That's not an issue. They can bring margins all the way up to 100% of a futures contract. But at that point, what is a futures contract for? It's not a future contract anymore. It becomes a spot contract. When you are in a situation where the underlying physical price is a very strong driver, you cannot manipulate it that much anymore. They have been doing these things with stocks for a long time, where derivatives have been successfully used to manipulate stock prices. More often than not, on the way up front, with shares that are immaterial and can be effectively fabricated out of thin air, with significant amounts of fail to deliver and off-the-book position on shares that are amplified by the extreme complexity of derivatives out there, you can really achieve things that become significantly disconnected from reality. The problem with silver is that silver is very real. The companies are very real. Their products are very real. In this case, these manipulators have been really caught on the wrong foot by the quick developments in the real world that they haven't been used to dealing with for a very long time. Effectively, commodity prices have been notoriously manipulated for decades. Banks have been fined, there have been reprimands and so on, but it carried on. That's how the business is. If you get a fine, it's a cost of doing business. So people kept playing this kind of shenanigans until they exaggerated and something snapped. And when something snaps and breaks beyond repair, serious troubles begin. Derivatives per se are a very powerful and useful instrument when used properly. They help companies manage the price risk of their inventories and supply. Financial institutions within an honest environment should act as facilitators, not as masters of the world that can control things at their will to maximize the profits extractions against the real world. I'm saying this because the silver paper market will survive this period, but to survive, it has no alternative but to reset and reattach itself to the physical world. And where is the physical world? It is already $22 to $25, if not more, away from the current prices on screen. So, unless these financial institutions want to see their business evaporate and the whole industry go back ages in the way of dealing with a commodity, with incredible repercussions for everyone operating in the industry due to a lack of trust and efficient financial instruments to manage their risk, they have to do something very quickly. Doing something means, first of all, allowing the paper price to reconnect with the physical price and start trading at close levels so it becomes meaningful again. Second, they have to close all the naked short positions that were open recklessly during the years to keep profiting from an extreme market distortion that is no longer achievable. These positions were made possible because of the way banks and brokers operate, selling way more silver futures than they could ever physically deliver, never doubting their ability to source the physical if anyone wanted physical settlement. But in reality, The market was never driven by physical settlement, as it should be. It was driven by cash settlement. Once the gap becomes so big and there is such a scarcity of physical, the whole dynamics change completely. So, if you want to keep the market just in a small cash settlement and not full physical delivery, you need to allow this market to reprice. Furthermore, if there is such a scarcity for physical silver, and we're talking about future prices, as a matter of fact, if the market were working properly, futures contracts would start to be bid aggressively to manage risk. This will push prices higher and higher, influencing the spot price too, until, as addressed earlier, we reach that level where other people who hold physical silver and are not forced to use it in the industrial operation will be happy to let some go, easing the stress in the market. At this point, we come to the last part of today's podcast. Thank you for staying with me till now. In this last part, I'm going to talk about the price in the medium term and answer the question many people keep asking me. Shall we invest in silver miners? What's going to be the impact on silver miners? As you could understand, I do expect a very, very quick and sharp reset in the short term. They have to allow this to happen, because if they keep pushing against it, if they keep slamming the silver price down, then more and more people who are not industrial producers but are investors will realize the current situation. Not many people out there still understand this, but the more people realize it, the more physical inventory will be bought by investors and leave the market, creating a bigger and bigger problem. Whereas, if they allow the price to snap up very quickly, many investors are going to miss the move, and will have a better chance for it not to shoot up that much and then crash down once new supply is unlocked, establishing itself at a new, higher level of equilibrium. I expect this new level of equilibrium personally to be around $100 or slightly above for Q1 2026. At that point, silver miners and people who hold silver will be incentivized to try to increase production and reduce the deficit. However, there are two important things to bear in mind. One, as already mentioned, we are in a very high monetary inflation environment. In the same way, gold prices will keep going up no matter what in the future, as I've been saying for years, and that has happened, the same is going to happen to silver, because the higher the silver price goes, the more it becomes a viable alternative as a monetary reserve. It's not similar to gold yet, but it's getting there. There are already central banks, as reported by Bloomberg, buying physical silver. These should be scaring the hell out of companies, because when central banks jump into the market, they do it with unlimited money power. What can happen at that time, right? But here is the other thing. Silver mining production is currently constrained. To understand what's going to happen to silver miners now that we realize the price is going to shoot up, then come down to an equilibrium level, and then continue grinding higher in the long term, because the deficit between supply and demand is not going to disappear anytime soon, we need to discuss the impact on silver miners. This will help you understand why, right now, silver miners are not going up as much as the price of physical silver, a gap puzzling many people. The answer is actually very easy if you think from a business perspective. From a business perspective, miners have already committed their current production at prices set in the past. So, in theory, what they should have done to avoid missing a lot of revenue would have been hedging with future contracts. Some miners do this, but not to the extent you would expect, because using derivative contracts heavily also becomes expensive for their operations. Many of these miners don't have very large financial operations, as you would expect. That's point number one. Point number two, miners now know there is a massive deficit in the market. These very same miners have been suffering from decades of market manipulation and price suppression, pushing their profits very low and pushing a lot of miners into bankruptcy, paradoxically, if I may speak. It pushed a lot of silver miners to effectively focus on silver mining only as a byproduct of mining other more profitable commodities like copper, lead, zinc, and so on. So now, these people who arguably would want to make up those lost profit are called by a buyer saying, I offer you $10 over spot. Do you expect they're going to commit to anything? No. They are the ones who are going to dictate the price for the medium and long term. So it's in their interest to see the paper market develop a reset, reprice next to reality, and then at that point start making consideration and expanding their operations appropriately. This will serve the increasing demand for silver while allowing them to profit significantly, without the risk that, like in the past, they increase supply, the price crashes, and they end up saddled with a lot of debt they cannot repay, going bust, and the mines end up down the drain. Of course, they don't want this to happen again. However, silver miners themselves have a problem. It takes years to open and operate a new mine, literally. And right now in the world, there is not one specifically new mine dedicated to silver because the space has been so manipulated that silver was seen as too risky and unprofitable. This means if you are looking for a senior silver mining company, in reality, when you look at the financial, you realize the amount of revenue that comes from silver is usually around 50% in the best cases. So if you think about investing in those companies, you need to consider the price of all those commodities they mine, which are also increasing due to high monetary inflation and increasing industrial demand, but might not be fully correlated to silver. If you want a bet closer to silver, you need to look at junior silver miners. But most of those companies are not actually operating yet. They rely on financing to bring those silver mines to operation. And again, it will take years before they start generating revenue. So between today and that time, there will be a significant risk that the price will fluctuate along with the global economy, creating a very high beta investment. Why? Because as I said many times, all this demand is driven by two factors, monetary inflation and industrial demand. Monetary inflation will keep going on because governments will never be able to repay all the debt they have, okay? No doubt on that front. However, the economy has cycles and it cannot continue running on fumes forever. Otherwise, we will be heading into an environment where fiat currencies becomes completely worthless, and currencies will shift back to gold, silver, physical goods, and assets. It's an environment that could be a complete disaster for governments. So they have to allow the economy to clean itself, enter our organization, and purge all the toxic assets, behaviors, and debt-driven spending piled up over the years at some point. This, for sure, will impact silver miners, because unlike gold, which will keep increasing no matter what in the long term due to monetary inflation, there is no alternative to that. Silver is not a monetary asset yet. It's effectively an industrial asset. It will only become a monetary asset if the price is high enough for the physical amount of silver not to become too large and expensive to store compared to its monetary value. So, silver miners might have a significant run-up period, but if you want to invest for a very long run, you need to be very careful. There are going to be significant ups and downs within the overall upward trend. You need to be prepared for times of volatility that I assure you will be very difficult to trade. So either you are a real investor in the space who knows this risk, or this space might not be as profitable or rewarding as holding the physical metal for a while. Physical metal will also be impacted by the economic cycle. However, considering the scarcity in the overall commodity space, it will take a very, very deep recession to start significantly impacting commodity prices. But the governments will not allow a very deep recession. They will allow a mild, protracted recession, but not a depression, because that creates social instability, and it's something no government wants to deal with. That's all for today. I hope I helped all of you who listened till the very end to clarify and have the full picture of what's going on with silver. Please don't rely only on my information. Do all your own research to gather the information you need for your current situation to eventually be in the space and navigate the environment. I wish you the best for the year to come. Thanks a lot for supporting me on X on Instagram and for reading my research on JustDario.com. Have a nice weekend.